Hello and welcome to the Bronco Wave. Today back with gold in US dollar again. And it's been a couple of days since I've had the last look at gold. I went through my counts a little bit and played scenarios forth and back, and basically this is what I'm going with right now. So we can see that back here in 2016 gold finished this wave 1, and which was the first impulse, and following this I'm seeing this as a wave 2, so we can see an A, or that's more likely a W, and a wave X and another wave Y down, so a very complicated complex correctional pattern. And following this wave 2, this correctional pattern, we could see this huge rally, which is just characteristic for a wave 3. And following this, a wave 4 down, which did not go into the price region of wave 1. So wave 4 definitely a possibility. And then following this, wave 5. So this is one possibility right now. So if this indeed is a wave 5, and all of this impulse has been finished, this means right now that if we look back, this was the finish of the wave 1 of one larger degree, and this was a wave 2 of one larger degree, and or probably was, and or at least as far as we can tell right now based on the price movements. And if this all was a wave 1, this could be the wave 1 of the following wave 3 of this movement. So we have this 1, 2, and now there should be a wave 3. And if we project those targets out, they are really high. So this wave 3 should take gold really high. But if a wave 2 is at hand, we could see gold drop once more, and in a significant manner. So that's definitely a possibility, especially considering that the economy is recovering very slowly, but it is in large parts of the world. The coronavirus does not play that much of a role right now. Of course, for selected sectors it still plays a role, but the impact has gone back significantly, and the world has seen that it's not as scary as people have thought, and most people are adapting to the measures that have been taken up by governments quite nicely, and now can look into a little brighter future than a couple of months ago. So this is starting to play out in the economy. You can see that stock markets have been correcting a little bit in the last days, but nothing to worry about, and there's a good possibility that they will go up again in short term towards the end of the year. And this could indicate that gold goes down once more, because risk off means gold goes down essentially. There are a couple of other factors at play. On the other hand, we have a slightly devaluing US dollar, which would indicate that gold in US dollar could become more expensive or stay at a stable rate. And the general demand for gold is very high, but then again, gold still gets produced, and the demand will stop at some point or just stay the same. So a couple of factors at play here. It's a little bit hard to anticipate right now, especially judging by the fact that all of this could be one impulse. The other scenario would be that this 5 goes up even higher. We see a 3 here and a 4 somewhere here. So this could also just be a wave 4, and we could see another wave 5 that could take gold maybe in this 2,400 region. So definitely a possibility. But for now, for the moment, I'm going with the scenario that we see this finished impulsive move, especially judging by the fact at how high this MACD has gone. And now we go back down again, and Yeah, we could see, of course, the beginning of a correctional pattern. So if gold decides to go down, we could see a correctional pattern that takes a couple of months or half a year or something. So we could definitely see a gold correction until 2021. So that's definitely a possibility and something to brace for. So that's definitely a possibility. And if we want to look at targets for this correction move down, yeah, we can just take the Fib retracements, place them at the start of this move and at the high of this move. And yeah, essentially we can see that the first retracement is around $1,831. So this, in my eyes, is a very reasonable target for this gold correction. And I think it is highly likely that gold touches this retracement in some form. Maybe overshoots a little bit. Maybe gold could get caught up by this EMA 50 that's lurking down there. So in my opinion, I'm not that sure if we will yet see a correction that goes down to this towards the second retracement, which is the 38% retracement, which is at $1,680. I don't see this being reached right now. We could see a three-part correctional move, which could go something like this. Yeah, it starts at the top here, goes down towards this retracement, then could go up again, maybe all the way to close to $2,000, and then go down for the final push towards this second retracement. And even then, this could also just be the first wave of a correction move. We could see another move and another correctional move down. Yeah. So if we go by Elliott wave theory, a lot of wave 2s like to correct into the price range of the previous wave 4. So if we get a wave 2 and it behaves accordingly, we could even see over a couple of months a correction move that goes down all the way to 1450 again. Yeah, so that's definitely a possibility. But then again, if this is no wave 2 and just a wave 4, we could see just one more push up all the way maybe to $2,400 or something, and then see a correction wave 2 go down, which in turn then would only reach this price area of maybe $1,800. So yeah, it's very hard to tell right now. Two big possibilities at play. In my opinion, one thing is for certain, and that is that gold is not yet done and will correct at least a couple more days, maybe a couple more weeks even. And in my opinion, I see gold hitting this red retracement at $1,831. So definitely. So maybe a little overshoot, maybe touch it and then turn up again. But this is a price range that I'm very looking for gold, and I expect gold to meet this price range and then do something. If it's just an intermediary correction move up, it's fine. We just have to wait for the next dip and then maybe see what gold does and where it turns around. So a lot of possibilities at play. Right now I'm going with the scenario of this wave 3, because just if I look at the trend-based Fib extension, we can place them here and at the top of this wave 1, and then draw them all the way down here to this wave 2 finish, and we can see that basically this 0.618 extension has been met very nicely. And this is typically the target of a wave 3 following a wave 2 impulse. So this would have been hit perfectly. We got a wave 4, again, that did not meet the price range of the wave 1. So this is also, according to Elliott's wave rules, perfectly possible. And we saw a following wave 5, which touched and even surpassed this 2.618 extension, which is essentially the perfect target for a wave 5. That being said, depending on how you count the Elliott waves down here and those price movements, you could implicate some 1-2-1-2 extensions down here, and some price targets have not been met accordingly and in a perfect manner. But yeah, the big picture looks very nice for gold. So I mean, if we look at the daily view, we can see that this extension and this extension have been met with wave 3 and wave 5 supposedly. So this fits pretty much. Yeah, so yeah, it's definitely a possibility that yeah, that this is a finished wave 5 and we can see a wave 2 going down. But yeah, then again, there's the other scenario where basically this can be up here and we can see a higher wave 5. So this is something that time will tell. I personally see gold at least bounce off at this EMA 50, which should give a lot of support. I mean, we've seen it here. So gold dipped below the EMA 50 for a very short time, but then again, this has been a stable upwards trend move, more or less, just a little bit broken by this wave 2, but that's perfectly normal because wave 2s are meant to create doubt. In turn, this means if we get a wave 2 here, we should see a correctional move that will create some kind of doubt in rising gold prices. But yeah, in the long term, I'm very bullish for gold, and I see significantly higher prices. And this target price at $20.70, $20.80 is, in my opinion, just the beginning for gold. And I hope that we do not get such an extended correction period, which yeah, takes 1 or 2 years following this rally, which has been going on for 2 years. But it's definitely a possibility that we get a correction period that's similar to this, and then just another rally up. And yeah, definitely a possibility. And it's always, if I remember correctly, it's 1/3 impulsive moves up and 2/3 of correctional time. So in gold, we might have some waiting time ahead. Of course, spiked with little price increases, something like this, where, yeah, which could, of course, be traded. But yeah, in the long run, I see, as I said, gold in the low 1800 regions and at least touch the 1830 retracement, and from there maybe start a short upwards move, maybe 1830, then $2,000, something like this is something that I could imagine for gold. If all of this is not some kind of triangle pattern that is developing right now, but then again, we could also see a triangle pattern in the larger scheme of things. And yeah, so a lot of possibilities at hand, and to me it's not entirely clear which one it is. As I said, I lean a little bit more towards the possibility of this being a finished wave 5 and us getting a wave 2 right now, which of course would mean very nice prices, yeah, to acquire gold basically before entering the next rally in a couple of years. Hopefully it will be sooner, but yeah, we will see about this. Okay, so that's it for gold for the moment, and I will probably take a look at gold in the next couple of days, maybe in a week or so. And until then, thank you very much for watching, and see you soon.